Hi friends, welcome to my YouTube channel SS Analysis. First of all, I would like to tell you that if you are watching this video first time, subscribe my channel to see my more upcoming videos on analysis of different commodities and equity indices. And second important thing is to watch this video till its end to understand this solely to take your decision. Your one like will motivate me to be regular in working more hard for you. Let us start the day to analyze the movements of S&P 500 index in different time frames. Friends, before proceeding further, I would like to tell you that this will be a most important video of the day because today I am going to conduct a study on comparative moves of gold futures along with various global equity indices to recognize the further direction moves during the upcoming weeks. So friends, I request you to kindly watch this video till its end. Friends, you know that the trade tensions once again resurfaced on Friday, and this time it appears that they will be a factor for quite some time. US indices including S&P 500, Dow and Nasdaq fell on Friday from their recent highs. Friends, I find that this fall seen on Friday was evident enough for a downward move during the upcoming week. So therefore, I find that the need of the hour is to keep a visual eye over the movements of gold futures to map the geopolitical moves which may impact the movements of most of the global equity markets. So friends, here you can see a daily chart of S&P 500 where I have tried to map the movements of S&P 500 that where they face stiff resistance. Here you can see at the level of 3021, S&P 500 have been constantly facing stiff resistance since September 12, 2019, and once again they tried to test these levels on September 19, 2019 before moving downward. Here you can see that on September 18, S&P 500 fell down up to these levels when they touched the lows of 2981 on September 18th, but the recovery was good and they once again the S&P 500 index witnessed a sharp recovery from the lower levels, and once again the S&P 500 index tried to test the levels of 3022, but from these levels S&P 500 index witnessed a lot of sell-off which resulted in formation of an exhaustive candle on September 19th, which has been confirmed by the downward move what the S&P 500 index witnessed on September 20th before the weekly closing. Here I would like to show you this move in a more clear way. Here you can see that the formation of an exhaustive candle on September 19th has been confirmed by the move of September 20th, which resulted in formation of a long bearish candle. Therefore, I find that the S&P 500 is going to see once again an advent of a downward trend during the upcoming week, where any upward move back up to the levels of 3011 will provide a good opportunity to go short in S&P 500 index, where I would prefer to go short, and my stop loss levels will be 3035 and my target levels will be at the levels of 2828 up to October 17th. Friends, this is my expected trading zone for S&P 500 index from September 22nd to October 17th, where my targets will be at the levels of 2828 for S&P 500 index. Therefore, I find if the S&P 500 index take a downward opening below the levels of 2991 on September 22nd, I find that the S&P 500 index will try to move upward once again back up to the levels of 3006, from where we will see a strong sell-off in S&P 500 index because the currently prevailing geopolitical situation looks more evident to create an indecisiveness in global equity markets. Before proceeding further, I would like to show you comparative study on S&P 500 futures and gold futures in a single chart with the S&P 500 futures. So friends, this is a monthly chart of S&P 500 futures where you can see the movements of gold futures, how the gold futures behave in comparison of S&P 500 futures. Here you can see that since December 2004, here you can see at the time that they were at the levels of minus 27%, and once again they try to move in opposite directions, and here you can see the beginning of an uptrend in gold futures. And since then the gold futures touched the highs in August 2011, and since then the gold futures started to move downward and touched the lows here in August 2018, where the retracement was 275% from the lower levels. And here you can see that the S&P 500 futures started to move upward from February 2009 and continued and touched the highs at these levels, where the gold futures came downward and both meet together when the gold futures, here you can see that the gold futures have been showing the gain of 275% on September 2018, whereas the S&P 500 futures were showing a gain of 266%. And once again here the volatility started to grow due to the advent of tariff trade war between the two major economies of the world, US and China, when the S&P 500 futures started to move downward and touched the lows here when the retracement level was 183%, and gold started to move upward and tested the highs of 370%. On Friday, the gold futures closed at the levels of $1,526, where I find that the gold futures look evident enough to move more upward once they sustain above the level of $1,539. No doubt that the gold futures will test the levels of $1,571 during the upcoming weeks. So friends, I find since the S&P 500 futures have been constantly facing stiff resistance at the levels of 3022, since then we have seen some retracement in the S&P 500 futures when they touched the lows here in August 2019, when they touched 240% retracement. And if the S&P 500 futures break the levels what they touched on 1st August 2019, no doubt that they will start to move downward with more steeper moves once they test the lows of 2828 up to December 2nd, 2019, whereas the gold futures may test the highs of $1,571 up to that period. Now let us have a look at the movements of gold futures. Friends, here you can see that this is a daily chart of gold futures, where we can see that the gold futures tested the highs of $1,524 before closing on Friday. Therefore, once again the gold futures have seen a good weekly closing on last Friday, and here I find that this is my bullish trading zone, where I find that the gold futures look ready to take a sharp upward move, where they can test the levels of $1,581 during the upcoming weeks. So this is my expected trading zone for gold futures, where my stop loss level will be at the level of $1,491 and my target level will be $1,580 for the upcoming week. And I find that a gap up opening in gold futures on September 22nd will define more strength in gold futures, where the gold futures may face their first resistance at the level of $1,551. If they sustain above the level of $1,555 during the upcoming week, no doubt that they will move towards the levels of $1,581. Therefore, I find that the growing geopolitical situation, if not resolved in time, as the US President Mr. Donald Trump is trying to resolve these issues during the UN General Assembly meeting in New York, where the Indian Prime Minister Mr. Narendra Modi and the US President Mr. Donald Trump may sign a trade deal up to the end of this month. We will see the new developments at the tariff trade war front, because on the Chinese front, I find that as the Chinese delegation of agricultural products has returned back without any decision, which may increase suspicion on the successful deal between the US and the China before 2020. Therefore, I find that this unresolved trade deal with China may create more volatility during the upcoming week in global equity markets. Now let us have a look at the current position of WTI Crude Oil Futures. So friends, this is a daily chart of WTI Crude Oil Futures where I find that this formation looks evident enough for good strength in WTI Crude Oil Futures since the attack on Saudi Arabia's oil fields, and where I find that during the upcoming week, if the WTI Crude Oil Futures maintain above the level of $60, no doubt that this will enhance the bearish pressure in global equity markets, where I find that the global equity markets will remain under bearish pressure during the upcoming week, where we will find more sell-off in global equity markets. Here I would like to discuss about the movements of Nifty 50 Indian indices. Friends, here you can see a daily chart of Nifty index where the Nifty 50 showed a good bounce back on September 20th when the Nifty tested the highs of 11,381 before moving downward. No doubt that the Nifty closed at the levels of 11,274, where I find that on Friday Nifty faced a strong resistance at the level of 11,386, where we witnessed a sell-off which resulted in closing of Nifty at the level of 11,274. Here I find that the upcoming moves of Nifty during the upcoming week will remain very volatile. Therefore, the opening levels on the first trading session of the upcoming week on September 23rd will definitely define the upcoming moves. Therefore, I find that if the Nifty 50 gives an opening above the 200 days moving average, above the levels of 11,234, we will see the Nifty 50 to test the immediate resistance once again at the level of 11,394. No doubt that if the Nifty 50 sustain at these levels what they tested on September 20th before weekly closing, if we find a sustainable move above this level, we will see the Nifty 50 test the immediate resistance at the level of 11,450. If the Nifty sustain above this level, we will see the Nifty to test the levels of 11,729, where the Nifty may face a strong resistance at the level of 11,729. But on the other hand, if the Nifty finds a gap down opening, below the 200 days moving average, if the Nifty starts the upcoming week with an opening below the levels of 11,200, in that case the Nifty will try to find strong support at the level of 11,111, where the 20 days exponential moving average will provide good support to Nifty 50, where the Nifty 50 once again may take a bounce back up to the levels of 11,226, where once again the 200 days moving average will provide stiff resistance to, and where no doubt that the Nifty may find some sell-off which may result in more downward move up to the levels of 11,058, where no doubt that the Nifty may find some support at the level of 11,080. But if the Nifty is not able to defend the levels of 11,080, we will see the Nifty 50 to move more sharply downward up to the levels of 10,923 to the upper end of this downward trading zone, where the Nifty 50 may take a sharp bounce back up to these levels, up to the levels of 11,118. Therefore, I find that this will be a consolidation zone where the Nifty may try to consolidate before moving upward during the upcoming week, which starts from the levels of 11,114, and on the upper side it is up to the levels of 11,450. So this will be my consolidation zone for the Nifty 50 for the upcoming week, where the Nifty may show a consolidation before taking a further directional move due to growing volatility in global equity markets. Therefore, friends, I find that the Ichimoku clouds will define the accurate directional move of Nifty 50, where the Nifty will try to move amid this Ichimoku cloud, where a breakout above the upper end of this Ichimoku cloud will define a strong upward move in Nifty 50. But if the Nifty 50 break this Ichimoku cloud on the lower side, I mean below the levels of 11,114, no doubt that the Nifty 50 may test the lows of 10,671 during the upcoming week. So friends, be ready for a volatile move during the upcoming week. Be cautious. If you like this video, don't forget to share this video with your more and more friends. Thank you.